the main factors that you might think about when selecting an individual stock in that group? Yesterday, we found most of our stocks by way of the stock screener, but let's go ahead and take a look at an alternative view. Yesterday, during the session, we used Micron as an example, and we'll continue to do that here as our starting point. But know that this is not a recommendation by any stretch. But I would say that one of the best ways for you to take it to that next step is actually to come here and click on the sentiment page. So I've typed in the symbol on Fidelity.com, then I went to sentiment. Why sentiment? Well, because if I go into the sentiment page, I have this nice tile all about the comparison of this specific stock against other stocks in the information technology sector. So this is against everything in the sector, not semiconductors alone, but everything in the information technology sector. And if I go ahead and click into it, it will tell me that on a valuation basis from 0 to 100, it says that currently it's a little bit overvalued. We would like a high number here for everything. That would be a winning analysis. Currently, a little bit overvalued potentially. And what are the things that you might look at to make that determination? Well, it turns out Micron has actually slightly negative adjusted free cash flow to price, whereas it's almost flat for the sector. It has a relatively high book value compared to its enterprise value at 42 compared to 0.28. Other factors along the way, and this relative valuation is what's leading it to say, you know what? Compared to the sector, it's really a little bit overvalued perhaps right now. And if we come over here to quality, we see that, all right, it's also relatively low in terms of its earnings quality. For example, it's having to burn through its accruals in a pretty substantial way. It has a lower margin on its products and other factors. So all of this comes together to get this summarized view on what's happening for the company. Again, if we go back to this kind of broad stage, we would love to see these very high on all four of those levels, and that would be a pretty strong fundamental basis. So this might be one stop for you in comparing what's happening. And if you would like to compare it specifically against the industry in question, well, come on over instead to the statistics page where our key statistics do relate it specifically to its industry. If I go ahead and click in more on this, it shows that, for example, in terms of market capitalization, this is one of the largest companies that exists. The average at 94 billion, but Micron at 143 represents the 90th percentile, the 90th largest if we were to line them up from 1 to 100, smallest to largest. The PE ratio, the PE growth, and all of these other metrics also showing up on here as values that we can compare directly against the industry. So I would strongly encourage this type of research as your next step if you're trying to wean out which stocks you're interested in or not within a specific industry. All right, we've already found some stocks. Which ones is worth picking? Here's how you might start weeding between them, knowing how they compare against the sector as a whole. Now, each industry is unique, James. I think we could certainly say that. And that means that depending which industry you're looking at, you might focus on different metrics. For example, if you're looking at retailers, one of the common metrics you want to look at is their same-store growth. But same-store growth simply doesn't apply to Amazon.com. And you'd want to look at an investment in Amazon.com in a very different way, even though it too is a retailer, even though it's not a physical brick-and-mortar focused retailer. So, James, anything else you'd add in this topic on how to find individual stocks once we've narrowed it down to an industry?
Well, I think you kind of brought up at least when it comes to Fidelity, you're one of the best ways to do it, right? Searching possibly through that screener tool. And what we can do to kind of keep the momentum going. Of course, right? We do have some of the symbols that came in or some of the questions that came in last or yesterday but I do like working with some of the questions that are coming in today as well. So I also want to kind of talk about how oftentimes when you're someone's looking for an industry, they're to some extent really looking for a bit of a theme as well, right? Where we talked about a sector is kind of these kind of group of companies with somewhat right similar businesses, and as we kind of dive down into then industries, okay, we get even further kind of concentrated on now these businesses are going to be even closer in relationship to each other. But there are also kind of ways that we can go even further. So, and that was going into those sub industries. Now, we didn't really talk about sub industries, but certainly we can to some extent even go into that in today. And Vidyat, I saw you had a question here, and that is how to search for cybersecurity stocks and ETFs. So, when going into kind of cybersecurity, and I guess we'll work with stocks in your question. So when we kind of go down that GICS model, and let me go ahead and kind of share that. I think there was even a question wanting to take a look at this yesterday because we get a lot of questions sometimes of, we've got, of course, our sectors, right? Similar characteristics with stocks. We have our industry groups, and then we took it to the kind of industry level. But we can even go further down into these sub-industries. Now, Jake and I used the GICS kind of classification standards. There's more than one. There are others that exist. There's also referred to as the ARBICS that's commonly used as well. They also have a technology sector. So there are some differences. Now, GICS, as we kind of narrow it down, there's information technology. From there, it goes to software services. And then from there, we go to software. Then they even have a further kind of designation. This is as we go into those sub-industries where it goes into kind of systems software. And that's many of those cybersecurity companies fall in that area. So again, it's coming to this kind of software idea. Now, if you're using something like the other classification standard, ARBICS, they do have a type of kind of network security, kind of further sub industry down below. So, for some of you, when you're thinking of themes, like in this case, Vidyat mentioning cybersecurity, well, to some extent, it's an industry, but we start having to go fairly kind of granular when we're looking at those kind of sub industries. Now, what I would typically suggest if anyone is more or less kind of looking for those kind of companies, well, starting with where Jake left off and kind of working with the screener, at least start by going to kind of that industry where they would fall in. Now, many of those companies, as mentioned, fall under not only technology, but here we are with our variety of industries. They're going to fall under the kind of software component. So if you're looking for something like an ETF that has, we know, software, kind of starting with the screener, going to at least the industry, even if maybe you're looking further down at a sub industry or a sub industry, depending on what classification that you use, at least starting with the industry can get you in the right direction. Let's go to, hopefully we get a few here at 66%. Let's say 2/3. So, of course, the highest concentration is going to be because it's focused on software. But you might even be able to look at ETFs that are designed to be even that further level beneath the industry. So in this case, we can actually see a few here. Here we go, spam. Theme cybersecurity, right? They have it in their name, Xtrackers cybersecurity. So here we can have at least, Wisdom Tree cybersecurity fund. So when you're looking for them, you don't have to know those sub industries, but if you can at least get that industry level, then you can start sorting for them. Let's bring this down to 50% and 66 so we can get that other kind of range that we were looking for. Anything else with cybersecurity? Amplify. And again, I'm just picking I want to try to get 5 here. Here we go. So this will be now 5 ETFs that just had cybersecurity in the name. So what I would typically do here, and we could actually select a greater number of them, but I'm just working with 5. Show only selected, click on go. And there are these 5 variety of products that at least have cybersecurity in their name. So when looking for this kind of sub industry, working with the industry can still achieve that objective. Look for it in their name. Now, as Jacob and I mentioned yesterday, the name doesn't tell us the whole story, right? Name looks can be deceiving, even though these names are, especially these ones, clever, hack, iHack, password, spam, I guess wisdom tree, they're not doing anything as a cyber here, wisdom cyber, possibly, or right, they're still trying to have that kind of theme in their name. Check out the basic facts, take a look at their benchmark index. Notice they all still follow technology. You can see their performance and risk. And then to possibly even go kind of further, because you mentioned both ETFs and stocks, a few ways you could do that, right? You could even work from some of these funds. And what's the largest fund here? I'm just kind of curious here. What would be the most by net assets? We've got a few in the billion, probably the more well-known. So just working with this one, I'm going to kind of click it, open it into a new tab. And what could be a starting point to find companies in this space, we can take a look at the composition of them. And I wouldn't be surprised if many of these have quite a variety of different underlyings within their kind of top 10 holdings. And remember, there's typically some discretion in these indexes as far as how concentrated or how much of the, in this case, the cybersecurity part of their business makes up that company. So let's take a look at a few of these companies that make up here. You might be saying, okay, here's kind of Broadcom. Well, right, they're typically known for their semiconductors, but again, there's some part of their business that is going to be kind of related to cybersecurity, hence why they're on this list. Now, a few of them here strike me as kind of something that really is focused on there, say Palo Alto or Fortinet, just to name a few, were these companies. So now we're kind of we're moving from ETFs, moving over to stocks, where if we look at in this case, this company, they will discuss how they're kind of focused on their cybersecurity, right? Cybersecurity solutions worldwide. Fortinet also, right? Cybersecurity and convergence of network and security worldwide. Still, you can see they're in the software space, but we can always go to comparisons. So not only are we looking for these stocks kind of starting from the ETF side of things, moving just from looking at their holdings, and then we can from here look at, well, top competitors. And would you look at that, right? There's Cisco. We saw them on this ETF. So we'd expect to see them there. Let's check Fortinet. Competitors, Cisco again, Checkpoint, of course. Palo Alto's going to fall kind of on this list. So this would be kind of ways that you could find, right, these types of kind of ETFs and stock. And maybe one more quick thing here, Jake, and I'll pass it. We can, I guess, go minute to minute or question versus question here. We showed this yesterday, this tool. So if you maybe already have a few stocks and you want to find ETFs, use the ETF kind of finder, the search by stock, and it's going to kind of tell you a few ETFs that have the exposure, at least within the top 10, to these companies. So Palo Alto, JNPR, and we'll do Fortinet. So let's PANW, FTNP, JNPR. We've got 3 that we're kind of within that cybersecurity. And here it is. It's going to tell you now what underlyings kind of have that in their name. And what I kind of like about this is that it's actually found a few others, right? We didn't see bug in that prior list. I think we saw just about everything else, but this is also, right, a few ways that we can kind of maneuver to ultimately address that problem of trying to find underlyings within this, in this case, more of a sub-industry, but still focusing on that industry. Clicking on bug just to kind of show how things are. We can go from many different ways to kind of arrive in a similar space. So I'll leave it kind of there, Jacob. Anything you wanted to add here? If not, keep going back and forth with one question at a time.
I think this question is so good. I'm just going to add one additional thought here, even one more way for you to find stocks that might work for us, folks. Here we are logged into fidelity.com already, and all I've done is launch the stock screener. For those of you who couldn't remember how to do that, you came to news and research and then either hit stocks or ETFs. Let's suppose we hit stocks. Here we're on this page, and we're just going to hit the button that says screener tools. As soon as I start a stock screen specifically, I'm presented with an option to be able to choose from any given theme. There's a whole bunch of different themes that are curated to talk about some of these. So if you're looking at something topical, check this out. It may find things that match what you're looking at. For example, there's one all about clean energy, biotech and drug discovery, 5G, cloud computing, and cybersecurity, it turns out, is one of those. If we go ahead and click into the cybersecurity, again, this is looking for individual stocks. So we might find some of those that you already mentioned to us, but we'll find many others as well. Palo Alto, CrowdStrike, Fortinet, Leidos Holdings, BAH, and then we could follow some of those same processes that you're looking at, James, to find ETFs if we don't want to invest directly into the individual stocks, but we at least have some of this available to us as ways for us to look into that cybersecurity potential or other areas along the way. So exciting way for you to kind of dive in there. Next question came from Robert. Robert, wondering what our perspective is on the building industry. I'm no economist to tell you what's going to happen in the building industry, but we can take a look at some charts and understand what's happening for any of these. Specifically, say there's some building demand with millennials versus mortgage applications declining. Let's go ahead and take a look at this BLDR that you sent in. BLDR is one of the companies out here that is named Builders First Source. If we dive down here and take a look at the full details on it, here's the company profile. It says that they manufacture and supply building materials, etc. So they're a company that's building these products, and they're located right here near me in Texas. But as we take a look and see what it's done, pretty positive for the first of these 6 months. And then what's happened over the course of the next 3 months? Well, it's been pretty ugly, unfortunately. If we back this chart out a while further, we can see that the most recent swing downwards is actually the end of what has been a very consistent upwards trend for BLDR. And that's true for some of the other large home builders as well. But as we take a look, this is a huge change in trajectory. If I was to go ahead and pull this up in our Active Trader Pro platform, where we do a little bit more of our advanced charting, and we take a look at BLDR, here's some of the things that I would want to understand. If I was interested in taking a position to invest in this, here's again that 5-year chart. If we look here, after this strong uptrend, something clearly has changed over the course of the last 3 months. If you're not quite sure what it is that has changed about this, I would resist any temptation to begin purchasing. It is currently down 31%. And as we glance back, it's not the first time that it's found its way to a decline of 30-ish%, even in recent history. If you are uncomfortable with the possibility of losing 30% of the money you invest in this, it would be wise to look for other options, because we find that this one clearly does have that as a possibility and is currently exemplifying it. But let's suppose that you've done your research and you say that, all right, I'm under the impression that there is some positivity still to be had in home building, and for this one specifically. Well, take a look, folks. There is some positive trends still in force. I would be watching to see what happens when it comes in contact with this area if the selling continues. If it can turn its way and move back upwards, maybe you've got another one of these strong pushes higher in store. So far, current evidence saying sell and sell quickly. The longer term trend, perhaps you're still willing to be bullish, but 30% loss on multiple occasions is certainly something to take a close look at before we move on. Great question. As far as the industries go for this one, you'll notice that this one finds itself not in the real estate sector, and that can be surprising for anybody who's a first-time researcher of the home building areas. But industrials is actually kind of the catch-all for all of the stuff that doesn't quite make sense somewhere else. Real estate is really talking about the ownership of real estate or profit from existing real estate. Even some mortgage-related financing can show up in the real estate businesses and the real estate sector that we divide. But in the industrial sector, we find that there is some interesting industries. And if we go over here to our details on it, we'll find that it is in the building products industry. We've got an entire industry to the building products. This is where we're also going to find some of the home builders and things that show up there. So don't be surprised that this is a little different than real estate as a whole. But nonetheless, certainly they are all related, at least in some way, as we work through them. Anything else you'd add to the home building discussion here, James? It's an interesting topic. I know you and I have gone back and forth about this a time or two.
Yeah, we certainly have. Well, you know, and just because since you brought up in this case, builders first source here, right? Let's say you're looking for kind of ETFs to get involved in this, as we can say, right, this type of industry. Now, as Jake mentioned, right, it comes when we're coming to the industrials, it is a bit of a catch-all. Here I am back on the screener building products. I like to do this at least 51%, so we know at least it's half. And oh yeah, look at that. We're not really even getting kind of anything dedicated to this. Actually, I kind of like this because this is kind of showing how not all industries get as much attention. When we talked about semiconductors and how quite a lot of products are created out there for that industry, and then even going into kind of maybe a sub industry with cybersecurity, there's even products related to that from multiple different companies. If we're trying to find building products, well, now we're somewhat limited. Right? There's home builders ETF, there's a building and construction ETF that still might be satisfactory. But of course, right when you're looking for stocks for them, that's when you can jump back into the individual, look at competition at the composition. And I don't know about you, Jake, but I'm kind of curious now, is a company like BLDR in this ETF or one of these kind of ETFs? And we can find them by kind of looking through, noting that both of their holdings, might be fairly different from one another. So I'm going to answer maybe a couple questions that came through here. I think I can kind of connect them all together. One from Matthew, one from Gene, and let's see, and another one from Anonymous here. Could you show how to compare ETFs in the leading sectors? So when it comes to just kind of looking at leading sectors and comparing them, so keep in mind that many the sectors there's an ETF for it from multiple companies, right? That's fairly common that multiple companies will have a product that's made to track the sectors. Now, the sectors could be kind of tracked slightly differently. They could use different methodology, but more or less, when you're looking at the sectors, they're more or less going to come out pretty close. Unlike some of the industries, how Jacob and I showed yesterday that the different semiconductor industry ETFs can have a very wide degree of performance. When it comes to the sectors, most fund companies get fairly close. So if you're looking to compare ETFs in leading sectors, first, it's going to be easier. I would say just take a look at the sector in of itself, right? If we want to see what sectors are leading, we can go over to our sector performance see which sectors are leading on a 1 month, 1 year, right, 10-year time frame, and then say maybe we're interested in utilities, right? It's been lagging. Maybe we're interested in utilities, hoping that they're going to possibly outperform if there's an upcoming recession. Again, just kind of throwing this out there, put a little bit of a narrative behind the the I guess the example here. Well, from here we could then look for ETFs within that sector, and you could also, if you like comparing things from a chart perspective, I'll see if we have this here. I want to say we used to have, I know this isn't really a charting session, but I know one of our colleagues, I think this might have been Constantine, right, created a chart of a variety of sectors. You can see 11 here is all sectors. So these are just ETFs from, in this case, State Street. So just another kind of fund company. But again, there's many different companies create sector products. So you could compare ETFs, sector ETFs in such a capacity. And of course, right, for those of you that maybe want to focus on even specific industries, you can create charts comparing all of the industries that you are following, and then you can track it in a similar fashion to this, where we can see if we go over 10 years, right, we know information technology is going to be up here at the top, leading the way quite a bit. You can see on the left-hand side the prices. I kind of hover it here. So we can see information technology being quite high and above XLK than some of the other sectors. Energy, right, trailing behind to the downside. So I would suggest using it in possibly such a fashion. Now, Gene and Matthew, I saw your kind of a question here that I think we can kind of tie into this comment. So Gene asked, well, how do we begin buying stocks when you missed on the rise to the highs? And whether it's a stock, whether it's a sector, or whether it's an ETF, it can be somewhat kind of troubling, right, when we're buying stocks at their all-time highs. But I keep in mind, all because it's at an all-time high doesn't mean it has to turn around. And this is something that is what catches a lot of folks, especially in the stock market, kind of off guard, is that all because something is either expensive or cheap doesn't mean it's going to turn around. Not everything is going to be kind of mean reverting, where yes, things do have to typically kind of, when some sectors perform well in one year, sometimes they can perform poorly in other years. But all because something is at an all-time high doesn't necessarily mean it's not going to keep moving up. And the reason why I'm kind of showing it in this case, we can see some of our sectors. This is going into 2020. I want to go back 4 years, roughly 4 years, where we had information technology up at the top, energy down at the bottom, just picking on those two because those are the extremes. Sure, it might have felt somewhat uncomfortable buying into the, say, the energy sector, or buying into the technology sector when it was at the all-time high. But as we can see, right, it continued to remain in that period. So it's going to be more kind of your outlook going forward. And if you're someone who's a subscriber of technical analysis, which many of us on the team, now I know this isn't a technical analysis session, you could have other ways to kind of manage risk and make sure that you're remaining in those kind of uptrending stocks and kind of closing out positions when they lose that downtrend, or they lose that uptrend. Matthew, I saw your comment, how do we pick a price as a limit price when buying a sector ETF? Now, our team is going to be very much kind of more technical analysis focus, where fundamentals can be great for choosing what to buy, but technicals can be kind of fantastic tools when determining kind of when to buy. So if you're looking for something such as kind of a when to buy a particular ETF, whether that be a stock or ETF or sector ETF, let me jump back to Active Trader Pro here, picking on the energy sector because we've used this for some time, and using kind of how the chart has been kind of revealing price can assist us with determining when and at what price we might decide to buy. For example, just looking at kind of energy here at one point in time, it looked as if it was struggling, right, to getting above such a price here. So when a trader could be deciding, well, when do we buy or when do we sell? When price gets to this upper level, right, as it did a fourth time, you may even say a fifth time if you want to look at each of these kind of areas separately. Is this the time to buy or sell? Right? It's oftentimes there's no right or wrong answer. It's going to be with your assumption. Do you think that this could be the breakout and this could be the time to buy? Or could you be the subscriber that when price is at this point, is it going to repeat what we have seen take place already in the past, knowing it did in fact break out before reversing and falling back underneath it. So this isn't a technical analysis focused class, so we don't want to go too far into it, but oftentimes we'll use charting to help us with not only monitoring sectors and industries, but even choosing our when are we going to enter and exit. So Jake, anything you wanted to add on those questions? If not, I know we got probably more than we'll be able to answer in this hour here. What question would you like to tackle next?
Yeah, let's continue on. The next question that was sent in, I'm going to do my best to give justice to here, came in from an anonymous asker wondering how can we see about rotation in stocks using this industry and sector information to better understand that. So let me pull up a couple of resources so that we can look at this together. First one I'm going to show you is right on Fidelity's website, and we'll go ahead and take a look at it. One of my favorite ways to take a look at this rotation information and understand it is first what we showed under news and research. Then we're going to click on markets and sectors, news and research, markets and sectors. And then specifically, I'm going to click over here to the sectors tab. And here we see an update about the business cycle. And this tells us something about which parts of the market tend to do well or poorly based on the current business, or you might think of it as the economic cycle going on in the economy. And we can understand some of it if we start to think about a few of these, even in basic terms. For example, consumer discretionary, this one right here, is things like luxury goods, jewelry stores, even some travel and hotels and restaurants, places that I love to frequent. But frankly, I frequent them most when things are going good. When things are bad, when there's questions about the reliability of the job market, maybe incomes are down in general, well, suddenly, this is the late cycle, suddenly I'm less likely to be spending my money at a restaurant and maybe more likely to be spending instead my money at the local grocery store, tightening up my financial belt in order to make sure I can make it through whatever storm is coming next. Well, consumer discretionary, that makes sense that this would be good in the early part when everything's just booming, and that it would do poorly in some of that later portion. And flip-flopped is the consumer staples, those grocery stores, where at the start, when everybody's eating at the restaurants, traveling, spending extra on luxuries, well, maybe these staples aren't doing quite so hot. Whereas when things start cooling off, suddenly places like Costco do very well. So as we think through this relative performance, this is something that can start to point us towards where we're looking. So Derwin, this idea is already a starting point to the answer of your question. How do we use this industry and sector information to better determine the opportunities available to us in the stock market? But like I said, this is just one of the resources I wanted to show. If we understand this as kind of our starting point, then we could also compare it against some of the other information available out there. So let me go ahead and pull up another piece of information for us. And this one, I'm just loading up. This is something that I share every week in my Jake Talk Sectors class. I hope it's something that you'll enjoy taking a look at. But this is what's called the relative rotation graph. So this talks all about that rotationary idea. I'll give a key here that shows what each one of these represents in just a moment. But the idea is this, that each of these quadrants, improving, leading, weakening, and lagging, is talking about the relative performance of this sector. For example, this one up here is communication services, doing well and leading everything else compared to how well they are doing. And it turns out a lot of things have started lagging behind. See how many are down here in this red section? But those lines are kind of swinging their way upwards, swinging their way upwards, swinging their way upwards, in many cases, starting to improve. So we can see this kind of general rotation. Each one of these lines will tend to move in kind of this elliptical pattern you can kind of see in a clockwise fashion, but they won't always move from leading all the way down here to lagging, but they may circle in a smaller sphere, depending on the actual performance. And in some cases, they'll even move in a direction we wouldn't expect, like this one here, IXB, which is the materials sector. Knowing a little bit about what it is, now I can show you here this key covering up just a little bit of the information if you wanted to know which one was which. But overall, all of the information that we're seeing on here is how the market is currently performing. So if we have some strong leadership showing up in communication services, and we're seeing a lot of weakness in utilities, weakening in technology, if we wanted to, we could bring that knowledge of strong communications, weakening technical, weakening utilities over to this same business cycle page and see, is there a period where our communication services tends to be positive, but where our utilities is weakening and so is information technology? Not quite. We've got positive, positive, negative, or we've got kind of flat and negative, positive. So we've got some possibility that maybe based upon that last week's worth of information, we're getting something like maybe we're in the mid cycle here. You can use that information to understand a little bit about it, but it points out that things don't always move exactly like this, or phases in the economy come in waves. Not everything hits at the exact same time. Even if things are really poor for the home builders that we saw have lost some of their most recent value, well, that certainly does not mean that it can't be positive in other parts of the market. So I would encourage you to take a look at some of those thoughts. Derwin, if you're interested in this, one option would be to join me at those Jake Talk Sectors classes. I'd love to have you. But if you are interested in finding this information yourself, you can go to relativerotationgraphs.com. It's a third-party website unrelated to Fidelity, and as such, we can't vouch for their information. But I hope you can see some of the value that you might gain from taking a look at this information. Again, if you wanted to join me to dive deeper into these types of talks, it's Jake Talk Sectors. That website where you could register was, again, fidelity.com/coaching, fidelity.com/coaching. It's similar to using that relative strength comparison and some of this comparison James showed on the charts with many different symbols, but now we're looking at it on this relative performance basis. All right. I think that about covers that question, Derwin, but thank you for bringing it to light. One of my favorite topics, absolutely. William, you were wondering about banking. You say, what about banking? What segments of banking would be promising during high and declining interest rates, retail, commercial, investment? Well, if we go ahead and take a look, we'll find that almost all banks are going to have exposure to almost all parts of that. For example, if we go ahead and take a look at, here we go. Where's my website? There we are. If we go ahead and pull up one of the largest banks out there, JP Morgan, if we go ahead and type in its symbol and then come down here to its details, we would find that under its company profile that they work in investment and lending products, cash management, payments and services, mortgages, services, residential mortgages, credit cards, auto loans, leases, the works, right? You'll be hard pressed to find a bank that exclusively does one or another. But if we were to think about the relative amount in one or another, perhaps there we might find some difference. For example, we might find that JP Morgan has more commercial banking, asset, and wealth management than does one of their largest competitors, Wells Fargo, which instead has a relatively large mortgage-focused portfolio. At least in the historical past, that has been the case. When we come down to it will also mention commercial banking and corporate investment and wealth management. It will have almost all of these same things. So even if we would like to dissect this, William, and say what part of banking might be promising based upon that, that would be a question best asked to Mr. Jamie Dimon or other CEO leadership in the banking world, even if not. But as we think through the impacts, in general, for banks, a rising interest rate environment is positive as they are able to charge higher rates on new loans while they're able to keep the rates they pay on deposit funds relatively low. That certainly has been the case that we've observed over the course of the last year and a half or 2 years as interest rates have risen pretty dramatically in some parts of the world. Specifically, interest that you pay. We could go ahead and come over here to the news and research and glance at the fixed income world to get an understanding of what's happening in terms of interest rates. And we can see that interest rates are 5+% even in short-term vehicles for many types of investments right now. This is money borrowed. However, if you were to deposit your money at JP Morgan or Wells Fargo or your bank of choice, you would find they'll pay in general substantially less than 5%. That spread between deposits and interest charge is their opportunity for profit. They can also, of course, lend more than the amount of dollars deposited, allowing that to overall come into play. But as we think through what parts are going to be doing better or worse, William, I'll tell you that there has been substantial concern about the commercial banking and especially commercial real estate related parts of the banking world, as default and vacant properties leave that area generally vulnerable to potential defaults on the loans that have existed. That has been a lot of the rhetoric. And as a result, the banks have been very conservative in setting aside huge quantities of money to back potential failing loans. But in recent quarters, I studied this most recently about 3 months ago, some of the major banks were able to take some of those reserves back. The loans were failing at much lower rates than were anticipated. It turns out companies were surviving and they were going to be able to continue to move forward. Nonetheless, it was a high jeopardy area, especially as we watch this reopening of the economy and seeing how much work from home versus working in office affects commercial real estate on a broad basis. Great question, William. I hope that wasn't too long-winded of an answer in the banking world. James, on to you, I guess, for the next section.
Well, I'm going to I'll piggyback off on kind of at least William's theme to jump into the kind of banking and the financials to answer the next question that came from John, just talking about RSC, and I think this could help answer some of the questions that we got that were just related to oftentimes comparing them and comparing the performance. Now, right, we've talked about how you can use tables, but if you're familiar or at least somewhat comfortable getting involved with charting, looking at performance and price movement from a charting perspective, can be a fantastic way to kind of compare the variety of different maybe industries or sectors or even stocks that you might be wanting to look at. So I'm going to go to the ETF screener page just very quickly here. And we talked about banks, and I have these sorted by the most kind of, well, I don't want to say necessarily most popular, I should say just the largest by net assets, where most folks have the most amount of money has flowed into them. And as we can see, KRE and KVE, these are two kind of banking ETFs. One's focused on regional, one's focused more just on kind of a broader view, 80%, 90%. So as you can see, that even something that says banking only has 80%. It's somewhat surprising, especially one of the larger banking ETFs out there. You'd think it should have almost 100% of its exposure to banks, but it's not necessarily the case. Hence why it's always good to look past the name. But jumping into KBE, we can see in the top 10 holdings, it's actually fairly kind of, I want to say, balanced, even though there is 15%, even though there's only 94 stocks. So by most kind of measures, 94 stocks in an ETF, it's actually a fairly low number. But the top 10 holdings only make 15%, which is quite different from something such as a sector ETF. And since we've been kind of looking at State Street, let me try it this one, since I'm not getting the drop-down menus. We've got the financial sector, 74 holdings, somewhat close in total number, 55%. Right? Quite a difference in concentration, 55% within 10 holdings versus 15%. So let's kind of compare using RSC what John mentioned. And to do this, I think it's going to be best suited in Active Trader Pro. Here we are looking at the financial sector. I'm going to go out 2 years just so we get kind of some of the more recent run up and some of the bear market of 2022. I can go over to compare. Let's say we enter KBE. So now we're looking at the banking industry ETF, and we can really see some of the differences here. And maybe you want to even throw the S&P 500, right? We could also do that. Here's the S&P 500. Noticing that the financial sector, right, more or less kind of moves in line with the financial sector and even the banking industry. And let's add one more. Let's add a stock. You had JP Morgan. JP Morgan's within there. And here's JP Morgan, the individual stock outperforming both the industry, the sector, the S&P 500, right? It's a singular stock, so it oftentimes has a greater degree of volatility that could be benefiting you if the stock's doing well, hurting if the stock is doing poorly. But when we only have two underlyings, one way that we can also measure the outperformance, in this case, right, it's clear to see the industry underperformed the sector last March. There was a bit of an issue with a few banks that somewhat kind of spread and really put a lot of pressure on the banking industry in of itself. Possibly some of you can remember, right, Silicon Valley Bank, First Republic, and a few others. But how about after this? Is it easier to see in this period of time after the sell-off, when were they either outperforming or underperforming? And one tool that we have under the indicators is going to be the relative strength comparison, RSC. And what makes this tool helpful is that the movement of this line, either up or down, the number is irrelevant, doesn't matter. It's from just simple dividing one over the other, but it's really the movement of this helps us know when one is either underperforming and outperforming. When in the line in this case is moving up, that means our primary symbol is outperforming. And we can see that clearly here. The banking industry sold off to a greater extent than the financial sector, hence the line rising. But since around that point in time, shortly following around May of 23, so over the past year, the banking industry, and as we can see, it has somewhat kind of outperformed the financial sector. So the difference between these two has somewhat kind of gotten a little bit tighter between them. And we can see periods of time where, in this case, banking sector did fairly well, the banking industry did fairly well, the line moving to the downside. So, John, I think this is certainly a great tool when it comes to trying to maybe get a better idea of when a stock is either outperforming or underperforming. And in this case, when a sector versus an industry could be either underperforming or outperforming. And it makes it really easy, especially in these time periods. Now, of course, There was the banking crisis last year that really added quite a degree of separation. But in periods like this, where they were trading far more in sync with one another, when financials and their sub in their industry banking were more or less moving to a similar degree, this really helps you see when one was either outperforming or kind of underperforming against, or in this case, underperforming versus outperforming versus its compared symbol. So maybe one more kind of topic I want to quickly kind of cover here. And this was kind of based on just some kind of general information since we're coming up towards the end. I saw a question related to, well, how can we kind of find that sector info? And there are quite a few further, I think, kind of fantastic research papers that if you're inclined to kind of take a proactive approach, which I know everyone here absolutely is. If you're in this session, that means you're not only interested in learning about the material, that you probably have a portion of your account that you take action in. You're what Fidelity sometimes calls an independent investor or an independent trader. So going to news and research, markets and sectors is going to take us back to that markets and sectors page. We're going to click on sectors. Business cycle, which helps kind of possibly us plan for when sectors could either outperform or underperform based on the business cycle. What we can view current phase, and this takes us to the institutional side. And there are a few kind of articles down below here that might be worth a look at some point in time. The business cycle approach to equity sector investing could be something you may want to pay attention to, especially if you're focusing on industries, because as we've seen, right, industries are part of that overall sector, and what the sector does could pull up or pull down that individual industry. And using sectors and industries in your own kind of research is going to be kind of important because sectors play such a huge kind of driver of that performance. Now, we showed this in the slides yesterday, but there is an updated view. So I kind of want to show the updated view for you all that kind of took the extra step and joined us in the session today. Now, this is a research report from Fidelity. Everyone should know Denise. She's on quite a few of the webinars that take place. Well, partnered with the head of index sector thematic and factor products here at Fidelity. And this is the case for using a sector-based framework in equity portfolio construction. We're not going to read this whole thing. Unfortunately, we don't have time for that. But a few things I wanted to point out, at least just to highlight some of the graphs. One being the source of return variability for US stocks between 1990 and 2020. Prior, we had one ending in 2015. This gives us a little more data. And what we've seen is that still the company factors are going to be the primary driver of performance. Easy, right? We all can understand that. The company determines its own fate. But the sector has a extreme influence, right, on that. A pretty significant, a quarter of the performance could be kind of attributed to sector-specific factors. Also know, for those of you that are interested in getting involved with sectors and industries, yeah, I'm not going to read all this, just talk about some of the well, we'll just make this a little bit simpler here. I don't want to go too far into this as we got just a few more minutes left, but also know that over the past 2 decades, 20 years, some sectors, and of course some industries, exhibit greater degrees of volatility than others. So if you are out here trying to pick stocks that are in specific sectors, and you're trying to trade industries maybe within specific sectors, understand that not all sectors are equal when it comes to kind of volatility. So this is the average standard deviation from 2000 to 2020, the US equity market being 14.4%. Some sectors are actually less volatile And a few of these, what are these considered, right? These are some of those kind of defensive sectors. If you ever hear a cyclical sector or defensive sector, there's actually no defensive sector. There's no cyclical sector. That's just kind of a category that we can group a number of sectors together. In this case, right, the staples, healthcare, and utilities been considered kind of defensive sectors that tend to do well when times are rough because, right, we're still buying toilet paper. We break our leg, we're still going to go to the hospital, no matter what the economy is doing. And ideally, we still want to have electricity running to our house to cook with, to have our refrigerator on. Hence why these are typically less volatile. Are sectors that tend to be greater, with greater degree of volatility, energy, information technology. And of course, we can infer that the industries that make up these sectors are also going to fall in line with that greater degree of, in this case, standard deviation, or right, volatility. That's this measure of volatility. So keep in mind as well, for those of you that are interested in taking the kind of sector and industry considerations in your own trading, because we still need to make sure that we are comfortable with the level of volatility we're taking on. We don't want to be blinded by the outperformance of maybe a sector or two, knowing that that sector may be a little more volatile than we'd like. So we might want to make sure we're comfortable with the position or the capital that we're putting into that trade or investment. So I'll kind of leave it at that point here. So hopefully, I know as we kind of round out this question and answer session, I do appreciate everyone for sending in those questions, because sometimes in these follow-ups we don't necessarily get as many questions, but this is one of the sessions where we would need double the time to answer the amount of questions. So forgive us if we didn't get to your question. Just know that we tried to pick some that had kind of multiple similar kind of questions that we could kind of group together, because ideally we want to try to answer the most amount that we can. Jake, in this final minute, maybe any final words, since you are kind of one of our resident sector industry experts on the team, or any other closing comments?
I hope that people join us back. If this is of interest to you, I'd like to get updates on a regular basis. Like you said, James, join Denise in those quarterly updates. Those are phenomenal. That's the investment research update every quarter. We love those meetings. Otherwise, you're welcome to join me on a nearly weekly basis to talk all about sectors. But folks, thanks so much for being here. Cindy, you were wondering if you can do that type of technical analysis only on ATP. No, you can do it on Fidelity.com. If you go to any stock page, for example, Apple, then I went over to the Chart Plus page. The steps are to go ahead and click compare right here. Type in whatever symbol you'd like to compare against. In this case, I'm comparing Apple against the S&P 500. And then the indicator is under the name Price Relative, RSC. And you'll see right down here at the bottom, it has that same idea. So all of this is available also here on Fidelity.com based on your own personal preference. But thank you so much, folks. We appreciate the opportunity to spend a little bit of time with you. If this was your first time, let us know. Did you enjoy it? Hopefully you can find us again. Roy wondering if we could show one more time how to register for those. Yes, absolutely. The website, Roy, and for anybody else that's interested, is Fidelity.com/coaching. I guess I've got caps lock on. Fidelity.com/coaching is the website. And that will bring you to this page. This is where you could have registered for today's session, but likely many of you used the convenient link in the webinar yesterday. Fidelity.com/coaching is the page we're looking at right here. And you can find under daily market briefings all sorts of details, like the things we've been talking about. That Jake Talks Sectors class is next scheduled on here, down here, scrolling down a ways to June the 18th is the next iteration of that class. So thanks so much, folks. Hope to see you there or at any of these other courses along the way. If you'd like to continue to develop your own ability to analyze in the markets and manage your own accounts. Thank you so much for your time. We look forward to seeing you again. Happy weekend to everybody. And James, good to see you, my friend. Take care, everybody.
Bye.